3, 2, 1.
Hi guys, it's Lynette, Chief Market Analyst here at ITM Trading, and I don't know if you know this or not, but oil today jumped almost 10%, and you might be wondering why. Well, I'll explain that to you. This was the first agreed upon cut since 2001, and with Russia in that loop, because they've got to push oil prices higher. They have to. But the thing that's quite interesting about this, you can see that they talk about how Saudi Arabia is taking a big cut. Okay, well, this is a graph on production, oil production, and you'll notice, I wrote that in there because you couldn't see it. That's January 2016. And this goes back to 2015. They have ramped up production. So this cut, frankly, is not really much of a cut, even though that's the way they're going to position it to justify the move in the oil prices. This is how they've done with the most recent agreements that they've had. And you can see this is the price of oil, and these are the agreements, and they haven't met one yet. This was the current one that they did back in September. Now, why do they need oil prices to go up? Well, they want inflation, but this is the real reason. This is, in this country, for those oil producers, here's your break even. And you'll notice that not one of them is below $50 a barrel. And yet, that's the price that we haven't even been able to hit it yet, even with a 10% increase. I want to come back to this one for a second. This big line across here is the resistance level. And you can see how it keeps kissing it here, 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 but it can't quite make it. And there is your $50 barrel, right? So we need, based on the break evens, we need a minimum of 51, 52, 50. We need $60 a barrel in order to avoid more of this. These are the bankruptcies for 2016 in the oil sector. There was an awful lot of debt that was taken on by oil companies around the world when oil was up at $120, $140 a barrel. Well, all those debts are coming home to roost. These are all of the bankruptcies. So they may tout it as a big deal, but they've boosted production just so they could cut and justify a higher oil price to avoid the bankruptcies. Because these bankruptcies, it will impact the global banking sector, as well as interest rates and the derivatives tied to those interest rates. So that's what they're trying to avoid. We'll see if they can stick to the agreement, but whether they do or not, they ramped up production just to give themselves a little bit of wiggle room. The other thing that I'd like you to just kind of be aware of, and we may talk about it next week, is the vote that's coming up in Italy. And this would be a vote of no confidence. So it's that populist movement that got Trump elected, that created the Brexit, the Arab Spring, etc. It is this confidence that's maintaining this system and allowing this to continue on. So this is actually a very, very big deal. We'll see what happens with the vote on Sunday. But if this passes, it will strip the Italian Senate of their power. So it's actually a really big deal, and it's all related to a vote of confidence or no confidence. So I'll see you next week. I hope you enjoyed this. Give us a thumbs up if you like it. Visit our archives. Go to our YouTube channel. And we love questions, so give us a call. Bye.